CoinMarketCap.com lists more than 22,000 crypto projects in the market. With so many projects in the space, the odds of randomly picking a winner most likely won't go in your favor. Now, whether investing or trading crypto, the goal is to find assets that appreciate in value and to help build wealth over time and avoid the ones that are susceptible to failure. Luckily, there's a way to help weed out the scams, the money grabs, the weak use cases, and ultimately all the poor performers. I think it's time that we get down to the fundamentals. While it's true that many traders and investors rely heavily on technical analysis, and while that may seem like a game changer to many investors looking to capitalize on future price action, the most savvy traders and investors know that focusing the majority of their attention on crypto with good fundamental evaluations generally leads to more profitable results, while also reducing the risk of making bad investment choices. Fundamental analysis is looking at strong metrics that cannot be easily gamed or easily manipulated. It's a method that I use to weed out projects that most likely will perform poorly or possibly even fail. It also helps me to identify the strength and overall value of a project so that I don't end up gambling away my capital in hopes of making some profit. Instead, it allows me to take more calculated risk by identifying the projects that are currently overvalued or undervalued at the time that I seek investment. And so just by taking the time just to do a little research, I can greatly reduce my risk of making a poor investment choice. So whereas technical analysis focuses on charts and price action, fundamental analysis looks deeply at the project itself, what it is, what problems it hopes to solve, its overall goals, and the means by which they will obtain those goals. Today, my goal is to share with you a list of things that I like to look at when I'm evaluating a crypto project to determine if it meets my standard of being trade or investment worthy. This is the first of possibly 3 videos that will cover financial metrics, project metrics, and on-chain metrics, and this will help you to learn what to look for when it comes to choosing quality cryptos in which to invest or to trade. Now, some die-hard technical analysts may claim that fundamental analysis is a bunch of busy work and that everything that you need to know is spelled out in the charts. However, my take is that the tools that we have at our disposal and the skills that we have using them is what gives us an edge in this market and helps make us winners. Road Dog Crypto. Welcome back to Road Dog Crypto. My name is Lane, your crypto road dog, sharing with you the secrets, the hacks, and the skill sets I picked up on my crypto journey so that you can avoid all the bumpy roads, the detours, and all the toll bridges in this digital landscape. Now, I'm currently on CoinGecko, but there are several other sites and apps that offer this same data. CoinMarketCap, which we saw earlier, is another one that I trust. And it's from here that we're going to start our deep dive into the financial metrics for crypto projects that capture our interest. Now, I'm starting with the financial metric first because this is information particularly useful for traders, whereas the project and on-chain metrics that we'll look at in later videos are geared more toward investors. We'll stick with Bitcoin, for example, so I'll click on that and we'll bring up this page right here. When it comes to financial metrics, I'm looking at a few important things: market cap, coin supply, and trading volume. Right over here, we got the market cap. And market cap is simply the current token price multiplied by the current circulating supply. And this can help us determine growth potential for a given project. It can also indicate how dominant or popular a project is. And just like in the legacy market, like Wall Street, crypto is divided into small, mid, and large cap projects. Technically, the smallest markets are often broken down to nano and micro segments, but for brevity's sake on this video, we'll stick with the small, mid, and large caps. To qualify to be a small cap, you got to have a market cap of less than 1 billion. Now, these generally fall outside the top 100 tokens that we're looking at right here, and you can find those by just scrolling down to the bottom and just clicking through the pages, and you can get down. This one's got 130 pages full of coins to go through. And here I am, I think on page 10, starting out at number 901 on the list. And you'll find the smaller the market cap, the more susceptible to dramatic swings based on market sentiment or even sometimes manipulation. Now, degenerate traders, those who love risk, seem to love the small caps. And while most of these small caps will die and fade away, there are a few lucky ones that will grow and thrive. And this is extremely high risk, but it does have a potential for some huge gains. So if you like casinos, then you might like these. But let's just take a moment to see what I've got on this page. I've got one here at the top of the page called Index Cooperative. Market cap of 8 million. In the last 24 hours, we got $95,000 of trading volume. The one right below it only had $2,500 in trading value. That one's Mysterium, still around the same market cap. There's a difference going on there that kind of spells out some things, doesn't it? So when you dig this deep or go with some coins that are so far down this list, you run the risk that you might lose everything if you invest in them, or you might just turn $1,000 into $500,000. It's possible, but unlikely. So in the small caps, if you're lucky enough not to go to zero, you can 100x to sometimes 1,000 to 3,000x your coins in this category. It's extremely risky, and it's definitely not for beginners. And some of these coins in this example, I would put Floki Inu, Baby Shark Inu coin, and KuCoin. Are you surprised? There really is a KuCoin, and you thought I was kidding, didn't you? So our next level are the mid caps, and they're somewhere between 1 billion and 10 billion in market cap. And at the moment, since we're in a bear market, that's pretty much things falling under the top 10. Usually you will find them right around the top 100, maybe down to the 200s in a bull market as the market caps increase for everything. These are typically moderate to high risk, but typically they show some growth potential. These projects can typically go from anywhere from 10x to 50x your investment from a bear market low to a new all-time high in a coming bull market. So a portfolio can greatly benefit by making some tactical picks from this category. There's still a degree of high volatility, but that's what traders love to capitalize on. Some of these mid caps also make some very good mid and long-term holds for investment purposes. Some examples are Zilliqa, Phantom, Thorchain, Quant, PancakeSwap, Trust Wallet, The Sandbox. After this comes the large cap cryptos that have a market cap of more than 10 billion. These are the lower risk guys in crypto, which have a strong risk to reward ratio. Usually these are found in the top 10, the top 20 list in the crypto markets. These are usually the OGs that have stood the test of time. They have solid use cases and they have a proven track record of growth. And they also have a higher liquidity that can withstand a lot of volume trading without crashing the price. These are our blue chips like Bitcoin, like Ethereum, like BNB, and even good old Dogecoin qualifies. Go figure. So basically, which coins that you choose largely depends on how risky or how conservative that your overall strategy is. Lots of buyers have no strategy at all. So if you do, consider yourself very lucky. You're at a good starting point. But typically, crypto investors view small caps to be a little bit more likely to grow when compared to the larger caps. Others feel that the larger caps have stronger network effects, like say Ethereum, which has tons of apps and projects built on its blockchain, and that these have more potential than the new and unestablished small cap coins.
Greetings to the crypto community. We are pseudo-anonymous. We are here to smash that like button. We believe this content needs to reach more people like you. We are watching. We are listening. Most importantly, we are liking and subscribing. We are pseudo-anonymous. Expect us.
So after pulling up a coin that we're interested in, checking out the market cap, our next financial metric to trade is volume. And here we can see 24-hour traded volume. Now we can use traded volume to help us determine the liquidity of an asset, meaning that if I decide to sell, is there going to be a buyer there that's able to meet the price I'm asking? Because if the market is liquid, it means that the market's competitive and there's lots of buyers and sellers, ready and willing to trade. But if there's a low liquidity, then there's likely to be a big spread between the actual asking prices and the bid prices. And basically, you're going to feel a little ripped off because you can't seemingly get a fair value when you buy or sell because of this. This puts investors in a situation where they can get stuck having to settle for a lower selling price or having to wait a long time for some more liquidity to pile into the project before they can exit. Now, low liquidity coins are a favorite for manipulation, especially through marketing. And this brings in the missing liquidity so that stuck investors can exit their position. And I hope you caught that very important nugget of truth. Liquidity is a very important metric overall, and it's especially true in the DeFi area, decentralized finance, when it comes to the decentralized exchanges and liquidity pools. Basically, if the trading volume is low when compared to other coins of similar market caps and similar coin supplies, it's not a great sign of confidence. You might also want to look at how many exchanges offer this coin, because the more that offer it, the better. Now, our final metric for today's coin supply, which will also play into the project metrics too, and we'll cover that aspect more thoroughly in another video. But for our purposes today, we want to do a basic analysis. So in a nutshell, it's the basic economy of supply and demand. Too many coins in circulation equal lower demand, which means a lower price value. So while that exciting new meme coin might only cost just a fraction of a penny and you could buy a whole ton of them cheaply, the very fact that there are more than them than there are sand granules in your kitty sandbox means that it's just as valuable. Dirt cheap with probably dirt cheap performance. So the coin supply, how many coins are out there on the open market, does matter. However, when you're evaluating the coin supply, we need to look at the circulating supply, the total supply, and the maximum supply. That is spelled out very conveniently for us right here. The circulating supply lets you know what is available on the market to the public. And for Bitcoin right now, that's 19.2 million. Now the total supply, the next one down, it's the amount of coins that have already been created minus, say, any coins that have been burned or permanently removed from the market. This is helpful, especially when you're dealing with, say, proof of stake tokens. Often there's a set unlocking period that allows massive amounts of tokens to become suddenly available, usually to the developers and early investors. And sadly, those are often dumped on the open market for profit. And these are some of the things you need to know about. The maximum supply is the total amount of coins coded to exist in the project's entire lifetime. This is supposed to be the absolute final number, and for Bitcoin it's 21 million. For others, man, it can be as high as the trillions or as low as just a few thousand. If this number cannot be easily found, that's a warning flag. And as you go pages and pages into some of those small and mid caps, you're likely to see some that do not mention a maximum supply. The worst thing to see is the infinity symbol there, and that means that there is no limit to the maximum supply, and that's just as bad as the fiat inflation that we're trying to get away from in crypto. So those are personally not projects that I am interested in. Evaluating these 3 supply metrics can help one to understand if the current price and the market cap reflect the potential value of this project. Let's say if the current circulating supply is $10, but another 3 million tokens is about to get unlocked in 30 days and to be dumped on the market, chances are not looking good for this token to hold its current $10 value, let alone increase in value or demand over the next short little period, right? In a nutshell, coin supply can help you determine current and future supply and demand, which can affect overall performance. Trading volume can help you determine if there's enough liquidity in the market to support positive price action. And finally, market cap can tell you how robust a project is and if there's room for future growth or not. Above all else, please do not hit that like button unless you found this information helpful or informative. In the next video in this series, we'll take a closer look at project metrics to determine what problems these projects intend to solve and ultimately what they can bring to the table to make this a good investment. We'll be diving into white papers, tokenomics, and roadmaps to give you the tools to do your own deep dive analysis. Until then, my name is Lane, your crypto road dog, reminding you that you've got this, baby.
If you like what you see, well then please subscribe, eh? And if you like what we do, then smash that like button too. And if you like to drink it, leave a comment down below.